The bulls are rocking strong, almost back to all-time highs for the S&P 500, the NASDAQ. IWM's lagging back behind a little bit. DIA, or the Dow Jones, getting dragged down slightly by a couple of key names. In today's video, what I want to go over is some easy money plays, some easy money strategies for the summer months, which is typically a slower season for the stock market overall, especially with this V-bottom recovery from the April tariff news. So if you're about that, if you're about making money, if you want to understand how to trade, also if you're a long-term investor, I know there's a lot of trading videos out there, but if you're a long-term investor and you just want to know where some key buys are, where buy opportunities, some levels, some technical analysis on the charts, this video is for you as well. So let's tap in, give me a like, a subscribe, turn on those notifications as well. I'll see you on Sundays at 7 p.m. Eastern Standard Time, where I go over the entirety of the market for that particular week. And if it's the beginning of the month, then we analyze what the month may look like as well. So make sure you don't miss those. You can go check out some of them previously. They typically last about an hour, hour and a half or so. Sometimes they go a little bit longer as I'm waiting, as is a live video. So without further ado, let's jump into it. I don't want to keep you waiting here and give you some key strategies from different vantage points of how to make money this summer with very low risk. Okay. Very low risk is, I think, is the key thing for a lot of folks. All right. So let's jump into it. Key news today. Okay. Stock and crypto trading site eToro prices. Okay. IPO at $52. Okay. That'll be interesting. But United Healthcare is one of the key stocks that took a nosedive as the market was spurring higher. So when you had these very solid companies, and UNH is a very key player in the Dow Jones, the US 30, right? And also the S&P 500, you have these key companies that are nosediving, okay? And when that begins to happen, it is a concern, but it's also a great buying opportunity as they may recover and should recover in the short term, okay? So I'm gonna go over that chart and show you how you can have some potential easy money opportunities over the next 2 to 3 months into the fall time with UNH. So that's number one. All right. Let's jump into the overall good news for today. The S&P 500 here, the key level that we broke above that I talked about on Sunday was 571, which is this orange daily 200 moving average right there. Okay. I've got the daily 100 as well, which is above 573. So above this zone was very key for a very bullish signal. Okay. For the market overall, we knew that Trump this weekend was trying to make some type of deal with China, and he's been yapping his gums per usual. He's acting pretty much like Fed Powell now. Anytime this man speaks about something, he's trying to rally the American citizens, you and I, about buying stock. He actually said it, right? So this gap up right here from 567, and then on Monday morning, we're up at 576, happened because of that deal overnight. Okay. Now, it could have gone either way. He said, she said, he said, buy stock on Thursday. The American citizens listened. They said, cool, I'll buy some stock. Right. I'll continue to buy because he said so. Right. Don't want to bet against Trump necessarily, but that is what essentially happened. Okay. Now, where do we go from here is the very key thing, because again, if you've been buying along this rally here, okay, great. Here's the rationale as to why, okay? Yes, there were some concerns. Yes, people were in fear. But when you're in fear, the key thing for a long-term investor is always be greedy, okay? So we were in extreme fear here on the fear and greed index. If you can see right there, we got down to about 3 on the fear and greed index, in extreme fear on April 8th, okay? That was the beginning of his tariff news and tariff talk. Right. And stocks begin to rally slowly, still a little bit of concern because it could have stayed down here, but it doesn't stay down here for long. As you can see, extreme fear hit in February. We rose a little bit, then it dropped a little bit lower. Then we kind of consolidated. And then finally a deal was done and we spur higher. OK, now we're back in greed. And when you're in greed, we can sit up here for a little bit longer. But again, if I go back to that fear and greed back in October in greed, leading into the election timeframe, we had a little bit of a pullback or sell-off. Okay. And we got back into the lower ends of greed and fear. And then the election spurred us back higher. So I want you to kind of take a look at this piece right here, because this is a bullish sentiment with a slight pullback. Bullish sentiment with a potential slight pullback. Okay. So with that being said, I'll put it into 3 different veins, okay, of how you can potentially make some easy money. Here's 2 ways. One, you're already in, okay? And you're like, Brian, I want to keep buying. I had one of my community members ask today, like, should I dollar cost that? Always do what you want to do. This is not financial advice, but always DCA into your favorite stocks, right? Turn on auto. Don't think about it. That's the old age of investing. But if you're trying to get more strategic of, man, where should I buy a little bit heavier, right? You want to personally buy on the next red day or the next pullback, okay? So the longer we continue to gap up and higher and higher and higher and higher, right? You don't want to load the boat at the top, okay? I'm not saying don't load your boat, whatever your respective stocks are or whatnot. It depends on how long you're holding them. If it's for long term, load up as much as you want to, because it's going to go up over the 5-year span, 10-year span, so on and so forth. But if you're looking for where's the next load up zone for this year or the end of the year or the beginning of next year, right, into Trump's term for the next 4 years, you want to wait on those red days after we've had continuous green days for roughly 2 to 3 weeks. Okay. So if I look at this weekly time frame here, do you see green week 1, green week 2, green week 3, green week 4? Okay. So we've had 1, 2, 3, 4, 5. We've had 1 red week here. That is the type of candle or week you want to begin purchasing again on, is a red week in a bullish trend. If I go back over to my left, 1, 2, 3, 4, 5, 6. If you can have some type of red week, right, that is when you want to begin loading the boat up again. Okay. 1, 2, 3, 4 weeks straight, red week following. Okay. So we could have some profit taking towards the end of the month, as investors may want to trim their profits to go enjoy their summer vacation. Okay. So with that being said, ride this wave for right now if you're already in. If you are still waiting and like, man, I'm having FOMO, I missed out on my long-term investing portfolio, right? Wait for those red weeks, okay? Wait for the red across the board when there's a little bit of fear during that week, right? More profit taking, you start seeing some red come down. That is where you want to begin your buying, right? And dollar cost averaging a little bit heavier, okay? So do not be surprised if a red day comes out of nowhere, or next week, or at the end of this week, there's some significant profit taking on Friday, maybe. Who knows, right? I'm just preparing those that are like, hey, I'm bullish, but where do I potentially get in and buy? Okay. And one way for my long-term investors is to wait for those red weeks, okay, or red week to come in, okay? And maybe at the end of that week, that's when you buy. So if it's a continuous red week every day, and you see a red candle, especially for those on the charts, you see a red candle starting to form for that week, wait for it to come all the way down, maybe dip buy for the entirety of the week, or wait for Wednesday, Thursday, Friday, and grab up heavier shares. And that would be your DCA time, okay, dollar cost average. Okay, so that's one way for my long-term investors, is a pullback, okay? Second way is if you are in the options trading space, okay, and you want to trade the downside, right? I know it might seem crazy, and this is a little bit one that could be slightly high risk, high reward, is trading the downside with put options that are a month to 2 months out, okay? Put options, for those that are not familiar with them, is that you can make money on the downside. Put the phone down. Okay. So I can buy a put option. Now, for those savvy investors out there that are on the selling side of options, I'm not going to go into that. Most people are familiar with the buying side. That's why I'm mentioning it. So if you're like, Brian, you could sell against this if you have 100 shares. Yeah, I know. Right. But I'm trying to make it as easy as possible, because this is a beginner friendly channel and I want to make sure no one's left out. So you could buy some put options, and I'll show you what that looks like. potentially a month to 2 months out. Okay. Just like when we were in extreme fear, we bought call options out. Okay. You can buy put options that are a month or so out, waiting for that pullback and make money on the downside. All right. Now, timing the top is a little bit tough, but sometimes what you can do is you can see some volume analysis. Okay, let me see if I can sign in here. Usually already had this open, so I apologize. All righty. Oh, while that's loading, we're going to go back to it. We're going to go back to it. Too many steps these days, I guess, is a good thing. All right. So one key thing that I sometimes do is look at a volume profile, and I'll type in, just say SPY puts, for example. And I love that trend spider there with that cup and handle formation on Palantir. All right. So you can see sometimes here that there will be volume analyses on some put options that are roughly a month out. Now, before I saw this, I was looking at the June 20th expiration date, because that's very key. We have FOMC that week, right? The Fed will be making another interest rate decisions, which personally with the CPI data, I think they're going to pause yet again, because with good data, there's no reason to cut rates. Okay. So if data is coming in fairly good, there's no rush to cut any rates. So with another rate pause could be a spur of a little bit of profit taking leading into that June 18th FOMC meeting. Okay. Now that's my rationale for the June 20th expiration. So if I come out here, the higher this goes, here's a couple of signals for why this could cool off in the short term. Okay. We've got some resistance up above, right? Previous support is sitting right around 590 to 593 on SPY. So if we push up a little bit higher past 590, if we can get above 590, because you see here, this top wick came in right underneath that 590 psych level, which is a previous support right here. So this could be the temporary resistance where they're like, hey, can't get above 590. We're going to go ahead and take our profits and begin pulling back. Okay. Now, where we pull back to is very key of how deep this goes. The first level on the downside that you'd be looking for would be 582 to 580, right? That's a psych level. And where we opened the market right there, reclaimed and came back up, got bought back up, reclaimed 580. So it would be in this zone that we could pull back to like that. Okay, that's the first level of retracement, would be 580 to 582. Okay, now what if we get a deeper pullback in the next couple of weeks into that FOMC meeting? We could get a 575 pullback like that, which would be 50% roughly of this gap fill where we gapped up from the trade deal. Very similar to how we gap down like this. Do you see this downside from the trade tariff news from Trump? And we continued. The trade deal was done and we gapped up because of that positive news. And you see the reversal that happened, and you can see the reversal that could happen here. All right. So 575 is kind of a downside target. So with that being said, I would come into my options chain on SPY. You can do this on various stocks as well. I'm just talking about the overall market to be simple. Once I chart it out to see my levels, I want to give it some time to June 20th. And I would come over here to those 575s. And yes, they are pricey. Okay. So I understand that not everyone has $700, $800 to spend on an options contract, which is why it's the second strategy. Wait for pullback for buys, or you could trade the downside and also make money. Okay. So let's look at how much this would cost. For example, $700 for that 575. You got a month on it. Okay. You got a month on it. Now, I could look at 570s as well for that deeper pullback. And you see the amount of, and let me move me over here. Do you see the amount of interest and volume that's on those contracts? Volume 34, 11, higher volume on those contracts. The further you get out, it's a little bit far. So I'm always on a public platform going to recommend or suggest, I should say, more things that are realistic. If you go further out, could we get a 570? Could we go all the way down in a month? Yeah, it's possible, right? But if I were realistic, 580 and 575 would be those deeper pullbacks that we could get, okay? So if I come here and I look at this and I'm like, hey, I want to spend $700 on this contract, Brian. If I spend $700, I think the biggest question that people have is how much would that make me, right? So I can come here into this chart and see the options contract prices, okay? So very similar to those calls that you bought maybe back at the beginning of April, and now it's a month and those calls have gone up, the puts can do the same thing. So here's $700 right here. There's the gap, okay? So if I mark about half the gap, which would be 575 roughly, it would go from $700, okay, to start filling this gap. And those contracts, if you can see the price there, would be $1,200, $1,300, $1,400. So you take $600 to $700 to $1,400, right, per contract that you purchase, and you've got a month on the contract, okay? So our analysis is correct that we could go a little bit higher, but this is the frame of thinking that investors or traders, I should say, can trade both sides, okay? And not many people can trade the downside. I personally like trading the downside, so I'm very comfortable, right, with, as we call, top ticking it or trading against, because of the overextension, because of the fear and greed index, because there will be some profit taking, that we are significantly up from the lows, and all it doesn't mean we're crashing. It just means people might say, hey, I'm up 50% on Palantir. I'm up 100% on Palantir. I'm up this percent. I want to enjoy my summer. Let me take some profits. So put sides, all you're doing is benefiting from those profit takers because you're trading the downside. Okay. So that is strategy number 2. Okay. Strategy number 2 is trading the put side. So I like looking at some of these gaps. I typically look at overextension. So the RSI, the relative strength index, close to 70 on a daily. Sometimes I get involved on a 4-hour daily and weekly, right? I know a pullback will be coming very soon as those RSIs get up into this zone. Okay. Do you see this on a daily? Where was this RSI up here at the top at all-time highs? It was close to 70. We pulled back pretty heavily there, and it's starting to get up there slightly again into resistance. Okay. So that's SPY, right? All righty. Let's jump into another one, UNH. Okay. Because I'm saying some quote unquote easy money trades or easy money buys, things of that nature. Okay. UNH. I want you to take a look at this nosedive on UNH, and this might not be for everybody because this type of downside could scare someone. Oh man, they're going out of business. Oh man, they could go lower, things like that. Now, how does an investor or a trader more specifically trade this? Okay. We know that, and if you don't know, UNH is a heavy insurance player. They've had some bad news, very similar to Boeing. Right. We talked about Boeing a while back when everyone was saying that Boeing was going out of business and they're horrible and the plane crashes and everything. And as they were pulling back, it began to find a bottom, and Boeing went from 126 back to 200. And this is beginning to consolidate, and it could break back to 300 and back to all-time highs as it's looking like a bullish consolidation. Okay. Higher lows, higher lows, higher lows, and trending upwards. Okay. So the same thing goes with UNH. This is a temporary struggle for UNH, right? People are hating on insurance companies, right? They're hating on this. The CEO just left. Their CEO just got, unfortunately killed, things of that nature. It's going to happen naturally with companies at times. Does that mean the company is bad? Not necessarily. So with that being said, I begin looking at the technicals. Okay. I want you to look at this overextension RSI. If I didn't know anything about the news, anything of that nature, and I knew that UNH was a company that is in the Dow Jones, the US 30, if I knew that UNH personally had good financials, if they were still making money, they're still profitable, things of that nature, I just look at this RSI here on a daily and say, this was overvalued. This was overextended. It was due for a pullback. Their earnings did it. It went from 600, gap down, and went back to underneath 500, dropped $150 in roughly a day. Okay. Now we have gone all the way down and we've gotten underneath the RSI on a daily down to 14. Okay. I want you to look left and see when this RSI got to roughly about 29. Okay. I'll move my face a little bit. Do you see this 70 and 30? It got down into this zone at 29 to 30, 29 to 30. And I want you to look at the respective chart at the top. What happened when it got down there? Bounced, went from 479 back to 544. It went from 433 back to 600. And now it is extremely overcooked. Okay. Extremely overcooked. I want you to look at this. United Healthcare sinks 17.8%. United Health has hit its bottom, says Cantor Fitzgerald, Sarah James. Dramatic fall price. Yes, it's unfortunate that they hit that. Yes, it's unfortunate that these are all hitting the stock extremely hard. So you've got fundamentals attached with overextension right here. And this is what we call an easy money trade or an easy money stock that could easily 50% retracement back to the upside. Now, 100%, yeah, over time, will UNH be back up through that gap, right? Back to 600 plus, most likely, right? This is the same situation when Meta, had this, situation with Mark Zuckerberg, right? When Meta was gapping down, like this and dropping from 328 all the way down to 200 and then moving all the way down to $70. Man, it's going out of business, all this kind of stuff. And it reaches an overextended RSI on a monthly back then in 2022. And guess where it is? Went from $70 all the way to $740. Okay. So these are one of those situations where yes, it could recover in a week with UNH. It could recover in a month. So I just want to throw this one out there more specifically because I think these are the types of trades and also long-term investments for some people that could essentially pay for a month, right? And it's not that much risk because you can put time on the contract. So let's jump into it. I want to end this video for you because I can keep going and I just want to teach and educate and let y'all know what's going on. So UNH, where do I think it's going first of all? Okay. Has it found a bottom? Okay. We see here that it reached 6 on the RSI on the downside. That is super oversold in a short time frame. So tomorrow it could rebound. This could be a nice day trade for tomorrow potentially, right? If it breaks above 320, it's probably going to moonshot to around 340 and it may, get to 350. Who knows? So it would look something like this. You can see that this buying is already happening. If it gets above that 320 line, I think it's going to make just a nice V-bottom recovery back to 340. Hopefully it doesn't do it because I personally want to get in on this. And I think personally it can get to 350 very quickly. Okay. 340, 350 very quickly. Right. Anything further than that is into this gap fill. If you can see there, that gap in the short term. So within a week or so, I do believe UNH will get back above 350. It's at 318. It closed at 311. Now, are we saying a full recovery in a week right here to 450? Don't know yet. It needs to clear some levels just, for the short term first. But I'm talking about in the short term, can we start benefiting from this right now? I personally believe so. So here's some contracts I was looking for, and I'll give a couple in short and long term. I was looking at this 400 call for June 20th. Okay. 400 call for June 20th. Okay. I've got a lot of interest on it here. Okay. Can you go further? Yeah, you can benefit from 410, 420. I'm just giving a nice psychological round number. Can you benefit from the 450s? Yeah, those can probably move. Will it get to 450 by June 20th? It could, right? So UNH moves like that, but 400s are the contracts I'm looking at. Brian, how much would they be? Okay. So today alone, they got as low as $150. And just on that buy up at the end of the day, it went from 150 to 280. So $100 already happened at the end of the day on UNH. You can see here, let me expand this. Got to see that 150 started to rise. Those contracts, look to my right. You see it rising. Now they're at 291. If this gap starts filling, those contracts in the middle of the gap right here at around $340 for UNH, the options contract price will be $600 to $700. And you've got roughly a month on it. Now, what if it goes close to 400 sooner than a month? Well, that's how that would look. So now you've taken $250 per se, right? $250. And you're starting to recover. Now it's $1,500. Now it's $2,000, right? Brian, well, what if it recovers the full move, right? And I don't personally, not in a month. I don't perceive that to be true. In a month, it recovers all of this move, but you see the potential in how the options contracts move. Okay. So this is one that I am heavily eyeing on entering tomorrow. I wish I would have had a limit order to get it underneath $200 for that date. But here's another one that you could look at. You could go into August, right? You could go into August and begin looking at some of these contracts to give it even more time, right? You could look at, especially for those that have bigger accounts or don't mind spending a little bit more money, right? You could spend a little bit more money and give it more time to get to 400 into August. So throughout the summer, okay? You could even look maybe at the 450s, okay? Some volume picking up on the 440s. You can look at the 440s or 450s into August, okay? So you could span a little bit more time. I'm just giving you that June contract as one that could move in the next month, all right, in the short term. But do not discount going further out, right? Going further out, the better, right? I was even looking at maybe 500s into, now significantly out of the money. I understand. I'm just, obviously talking to some beginners on here, people that may not want to spend that much money until they get more comfortable. But if you have a larger account and you're okay spending $300, $400, $500 for a swing, maybe even $1,000 for a leap, right? You're like, Brian, if I can turn $1,000 into $5,000 or $6,000, I'll spend it. Okay, then you do your own due diligence. All right. So December, can you come out further? Maybe you want to go all the way out to the 500s for December at the end of the year, right? Those are $400. So even give it more time. Brian, you really think it's going to go to 500 by December? Yeah, it could. Yes, it could recover all the way back up to here. Does it have to get to 500, right, by December? No, it could move in that direction and you're already making money. Okay. So those are some contracts that I would take a look at. And to end off this, I want to show you how it looks for TTD. Okay. This is one that we called inside the community. You can see that error there. I was entry right here. Okay. And I want to shout out some people inside of our community. Look at this oversold RSI at the bottom at $42. Okay. Do you see how much easy money this can be with options and also shares? Oversold RSI, getting on here in this underneath the 30 on a weekly, the higher the time frame, the better. Do you see here on a daily, oversold tremendously. And then it's just like a rocket ship within a couple of days. Okay. So it goes from oversold RSI, there's 411. And then by May 12th, what is that? $50 to roughly almost 80. So you've almost doubled contracts for options 300, 400, 500%. And you had to just spend one time, buy it, set it and forget it. Okay. Now this is one I'm looking at again to double up on the next pullback. So there's the first pop. If it can pull back through this gap, I'm looking to rinse and repeat, buy it again and take it up to the next gap. Okay. So there's UNH as an example of how that looks as it's gap down, downtrending, bad news, bad earnings, everything, all blah, 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 blah. Right. So please pay attention to this one. If you want to join our Discord, join the community, give an idea of where we're potentially entering. Would love to have you inside. The link will be down below. Want to shout out some folks inside the community. Shout out to David. He joined our community not knowing anything last year in the fall, right? Begin trading some options, working with me one-on-one from a consulting standpoint from his business as an entrepreneur, and also this skill set of trading. And as you can see here, he's finding his groove. Okay. It's got some leaps on SOXL, 258%. Apple, we called that one out here. If you can see there, swing ideas right here, Apple. All right. So we caught it before the breakout. All right. There's the Apple trade right there. Right. Inverse head and shoulders. It went from 198 all the way up to that gap fill of 214. There's a trade idea. Can't make it up. Exactly. Look where it went to. There it is. Right. So shout out to David for the amazing work he's done as of late. And just want to shout out him for that. Okay. He's grateful. Here's one cool thing that he said. Okay. My food store bill was just $135, even the same price as one of my runners would sell for right now. This is unreal how great learning the markets has been, still holding, right? So one of his last contracts of Apple, because he had multiple contracts, which he's built up to, right? And he was able to hold one extra contract to go to 500%. This happens all the time in our community, right? People are finding their groove and it takes time. Right? It takes time to find this. Do not give up on this skill set. If you're just an investor long-term in shares and you're like, man, I just don't know about trading, right? Get your groove and find time to understand it, because you can be in shares of Apple. You can be in shares of Google. You can be in shares of SOXL, right? But also you can buy some call options on these stocks as well. So this is what we're looking for on UNH. I'm getting really excited about it. Got some other trade ideas here as well. Shout out to anyone in ACHR. Okay. We talked about this one back in October of last year. I said 100 plus shares minimum. Okay. Plus leaps. There's how the chart looked at $3. Okay. Here's how the chart looked on Joby. Archer and Joby gave out contracts there. Joby, there we go. Take off. And here's how it looks now. It's at $11 from that entry back in October. Okay. So these are things that are building, and entries are so important, and we need to have some urgency on some stuff that I'm getting really excited about this UNH. So just wanted to give this free money play, this game. If you win on it, if you're interested in it, if you do your own due diligence and you're not inside of our community, awesome. Let me know down below in the future if you benefited from this, from either shares or long dated calls. Take a look at it. I'd love to hear your, I'll let you know when I get in and when we get in inside of our community. But yeah, without further ado, thank y'all so much. Appreciate you. Shout out to everyone inside of Leverage University. Link will be down below to join. You can join for a monthly rate, weekly rate, tap in. If you want to learn more from various different standpoints, would love to have you inside. All right. Peace, love, and blessings. Until next time, I'll see y'all in the next one. Peace.